You ever look at your portfolio and think, wow, I'm either early to generational wealth or three trades away from eating instant noodles for life? If so, congratulations, you're officially a crypto trader. But here's the part no one tells you. 95% of people in this game will end up broke. Not a little down. Not, oops, bear market. I mean, fully cooked, wrecked. Down bad and down worse. And in this video, I'm going to show you exactly why that happens. Step by chaotic step. Quick disclaimer. This ain't financial advice. It's for education and entertainment only. If you're looking for emotional stability, go buy bonds or a weighted blanket. Let's dive in. 1. Everyone starts with Bitcoin and confidence. Bitcoin is the gateway drug. You hear about it from a friend who should have bought in 2013, but somehow still lives with his parents. Or maybe it's a podcast clip with some dude in sunglasses saying Bitcoin fixes this. So you buy your first $50 of BTC. Congratulations! You now believe you're an early investor in the future of money. You check your phone obsessively. You're up $2.74 and already imagining your TED Talk about generational wealth. You say things like decentralized ledger at brunch. People stop inviting you to brunch. Bitcoin becomes your new personality. You're convinced you're smarter than the stock market and every financial advisor who ever lived. The problem? That little green number on your phone triggers something dangerous. False confidence. You think you've cracked the code, but all you've cracked is the door to total chaos. And next, you kick that door off the hinges. 2. The Big Three era. Bitcoin, Ethereum, and Solana, aka the vanilla ice cream phase. You're still behaving kinda. You hear people say diversify, so you do what most beginners do. Buy Ethereum. Maybe Solana. You're still hanging out in the top 10, feeling responsible. Grown up, balanced. Until you realize something tragic. They're boring. Bitcoin's doing a 7% dance. Ethereum's congested and feels like it's charging you gas fees to breathe. Solana is cool until it stops working every third Thursday. So you start thinking, if Solana did 40x in a year, what's the next Solana? What if I caught the bottom of the next one, before the influencers pump it? You open CoinGecko. You start scrolling past page 1. You start playing crypto roulette. Because vanilla isn't enough anymore. You want Rocky Road, Flaming Hot, Triple Dip, Moonbound Mayhem. You're ready for altcoins, and that's where the real mess begins. 3. The altcoin rabbit hole, where your portfolio goes to die. Altcoins are like off-brand energy drinks. Shiny labels, wild claims, and a strong chance of hospitalization. You start buying coins with names like Spartan Swap and MetaShibaverse. You don't know what they do, no one does. But someone on YouTube said it's building on layer 2 with real utility. That must mean something, right? You throw $30 into 10 different coins. None of them move, and except one, which goes up 41% overnight. You screenshot it, post it on Reddit, call yourself an early adopter, and now you're hooked. You start watching sketchy top 5 altcoins to buy now videos filmed in hotel rooms. You read white papers you don't understand. You start using words like tokenomics and TVL while still Googling what they mean. You don't realize it yet, but this is the beginning of portfolio death by 1,000 tokens. 1 pump, 5 dumps, 6 rugs, and a growing sense of confusion. Your logic is gone, your risk tolerance is maxed out. And your next stop? The meme economy. 4. Memecoins, where the fun begins and the money ends. This is the Vegas Strip of crypto. Everything is neon. Everything is loud. Everything is a scam. That you're hoping somehow works. You throw $200 into something called Fart New because it's trending on X and has a rocket emoji next to it. You're not researching anymore. You're FOMOing in off of vibes and vibes only. Your Telegram groups are full of people with anime profile pics and names like Bagzilla420. They all say this one's gonna 100x. They also said that about the last 5 tokens. They're all down bad, but no one admits it. You stop thinking in dollars. You start thinking in multipliers. If this goes to a $100 million market cap, I'll have 12 Lambos and a jet ski. Memecoins are fun until they aren't. One rug, one honeypot, one dev removing liquidity during your lunch break. And now you're staring at 3 cents in your wallet wondering where it all went wrong. But here's the worst part. You don't quit. You double down. Because you've seen people hit 100 times and you're convinced you're next. 5. Pump sites, alpha groups, and 1,000 discords of doom. You're now officially in deep-end territory. You're spending more time on sites like pump.fun than you do with your family. Every hour, there's a new meme coin launch. You ape in with $20 and hope it turns into $2,000 before the liquidity vanishes. You're no longer investing. You're gambling on digital scratch-offs that expire faster than a Snapchat. At this stage, you're wallet-tracking influencers. You start watching wallets tagged smart money, even though those wallets lost 80% last month. You're offered access to private alpha groups, only $999, lifetime membership, guaranteed plays. Except every play is designed to pump before you, then dump on you. It's like buying VIP access to a robbery, and you're the victim. Everything moves too fast. Everything feels like a missed opportunity. And the stress? Constant. Which is why you think the solution is to just go faster. You start thinking, if I can just 10 times one coin, I'll be even. And that brings you to the nuclear option. 6. The final boss, leverage trading. Here it is. The end game. The casino floor of crypto, and you're counting cards with crayons. You start using leverage because playing spot is for cowards. You convince yourself that 10x, 20x, maybe even 50x is just smart risk management. You're not investing. You're emotionally speedrunning your bank account. You've got charts open, lines drawn, indicators blinking. You're watching candles like they're life support machines. Every flash crash nukes your account. Every fake out triggers PTSD. Every perfect setup gets invalidated the second you blink. And when you get liquidated, you don't stop. You reload. You revenge trade. You spiral. Leverage trading doesn't just wreck your wallet, it ruins your sleep, your sanity, and your belief that money is even real anymore. Yes, you might hit that one golden trade. But odds are you'll keep swinging until you blow your account for the 4th time. At this point, you've become the meme, and you don't even care. 7. Why 95% end up broke, and the 5% don't. Here's the punchline. Most people don't lose in crypto because of volatility. They lose because they treat it like a casino instead of a business. The 95% chase hype, trade on emotion, and risk everything on coins they don't understand. They're addicted to dopamine, not disciplined about growth. They're in love with what if, and terrified of boring consistency. The 5%, though, they focus on risk management. They ignore noise. They DCA into high-conviction assets. They treat trading like a game of probabilities, not destiny. Crypto doesn't care about your dreams. It rewards patience, strategy, and control. And it punishes greed, ego, and panic with ruthless efficiency. You don't need to hit 100x, you just need to stop going broke chasing it. Crypto will either set you free or leave you Googling, can you overdraft a cold wallet? So the choice is yours. Chase every shiny new token until your bank sends a wellness check, or build a system that actually builds wealth. If you found yourself in any stage of this journey, hit that like button. Drop a comment below and tell me, what was your most embarrassing trade? And subscribe if you want more zero BS crypto content that doesn't sound like it was written by a Discord bot with a gambling problem. See you in the next one, and hopefully not in the trenches.